Good evening, everybody. Thank you so much for joining us this evening. And we hope that you can make the most out of this session. Please add your questions to the chat and we will address them during the Q&A. To give you an overview of this program, in the first 20 minutes, I will be discussing 5 mistakes to avoid when negotiating the sales of Indian properties. Then we have 10 minutes for Q&A at the end. At the outset, we have a disclaimer. This presentation should not be considered as tax advice. Please consult your taxation lawyers before proceeding further. We are sharing this information for everybody's benefit. I'm not an expert in property negotiation. And as you may know, we are specialized in dual tax benefits when you sell your Indian property. What are we trying to do here? In this presentation, I have compiled some common issues faced by our clients in the past 6 years or so that it may help make your property sale and repatriation a breeze. I have an amazing team in Bangalore and in Sydney. Thank you for all your efforts, Mangala, Pranati, and others. Over the following slides, I'll be describing in detail the 5 mistakes to avoid while negotiating a sale of Indian property and repatriating funds to Australia. As you may see, the ultimate objective here is to bring funds from India to an Australian bank after selling the Indian property. How do we do it? We have a few hurdles to cross before reaching that happy moment of having funds in our Australian bank account. Price of the property. How to get the maximum value for your property. There is no simple answer to this question. And at the same time, please don't quote the price out of thin air, right? In our experience, what has helped our clients to get the better price? We will discuss a few points now. Please take a market value certificate in support of the price which you are expecting, right? The documentary evidence supporting the valuation always helps in negotiation. You can also ask the bankers to give the valuation for the property so that, when your buyer approaches the bank, they get a bank valuation similar to yours and they don't have to pay the shortfall. This is a major issue. The most of the negotiation fails because the bankers are not giving a sufficient valuation from the buyer point of view. And also highlight our client, sell the property when you can, not when you badly need the funds. When you badly need the funds, and it's very difficult to get a proper market valuation for the property. And another major issue with respect to minor errors in the purchase documents. Get a lawyer to check the purchase deed for minor errors, right, which can be fixed easily beforehand, and it should not become a negotiation point. And there is another opportunity where you can take a valuation certificate from the real estate startup companies. They give you a valuation approximate for a small fees, and that also acts as a supporting document for your property. Consult a chartered accountant before doing a valuation. You might have to get the valuation for different dates. For Indian income tax, Australian income tax, documentary evidence is different for 8 years as well. So please get in touch with us before the sale. We can save some taxes for you with our tax minimization strategy. Stamp duty valuation versus market valuation. This is the elephant in the room. You can't ignore it, you can't address it. Most of the states have market values similar to stamp duty valuation, which is a great news for us. In some cases, even the stamp duty valuation is more than the market valuation. So higher valuation means, higher the bank loan eligibility for the buyer. That is the way to convince, right? The income tax department also can appoint an evaluation officer to reassess the value of the property if it is found to be undervalued. So we need to be really careful in this part. How do we resolve this problem? In many cases, Nobilis NRI taxation has connected our clients to other NIs interested in investing in Indian properties. So this issue can be easily resolved by us. Also, try and sell it to other, professionals working in really good companies, and that is a much easier way to solve it internally. And another important point which we have noticed that if you offer to pay part of the stamp duty itself to the buyer, so this issue can be resolved as well. And please be mindful of Anti-Money Laundering Act, which is enforceable in India, in Australia. Please Google this. And I often joke about nobody has received an anti-money laundering notices. Those who didn't get it, they didn't get it. I can understand that. Those who got it never talked about it, and their accountants and lawyers know notices issued under this act, right? So really be mindful of that part. ATO can also ask for arm's length transactions market value of the property. Withholding of taxes. Buyers don't have enough funds to pay TDS and stamp duty. Why this happens? Because for NRIs and for an Australian citizens, the withholding of taxes is at 20% plus surcharge and cess. And when a buyer approaches a bank, the bank usually gives the money directly to the seller, not to the buyer. Now, buyer has to pitch in 20% of the withholding of taxes plus a stamp duty for the purchase and other incidental expenses. They will not have that much of funds, and bank won't pay them either. So the only way you can reduce the withholding tax is by going for lower withholding of taxes certificate. So instead of withholding at 20%, we can get a certificate for 5% or 10%, and the buyers will be very comfortable to do this. So the best way to mitigate is to apply for a lower withholding of taxes. Please negotiate lower withholding of taxes with the buyer and make sure they agree to LTC. And at the same time, you need to disclose your residential status correctly. Make the withholding before you register your property at a sub-registrar office. There's a lot of drama happens there. At the time of registrations, and they will ask you to withhold the entire 20%, and there is some information available in online forum that the 1% is not applicable for NRIs. The 1% is applicable for Indian residents. So for us, it is 20%. TDS payments and returns. Buyers needs to withhold TDS and remit it to tax office. Often, buyers are not remitting it on time, which results in delay in tax lodgement. And you should insist on documentary evidence of payment of TDS. Another big issue is if the buyer doesn't lodge the TDS return. It is not only enough to pay the TDS to the tax office, they need to lodge the TDS returns as well, which results in a further complications with the tax office. We can assist you in processing TDS and TDS returns on behalf of the buyer to avoid this becomes an issue. Yeah, negotiate with the buyers to do the TDS and TDS return by your chartered accountant rather than the buyer's chartered accountant. And this is a one simple reason that a lot of issues with the tax office, because you can't go back to the buyer after the sale process. Then it's very difficult to interact and get these things done. NRO account and a joint account. Most of the delay happens from the banker's point of view, right? We know what is the rules and regulations. We issue a certificate called 15CA, 15CV, and now it is with the bankers. And bankers often take a lot of time to process the payments. And what you can do, negotiate the payment terms with the buyers and in which account they want to remit the funds. For example, buyer has deposited the funds into the parent's account instead of your account, and funds are stuck in the bank account. And in this kind of a situation, having a relationship manager for your account with the bank is very helpful in repatriation of funds. Most of the delay happens with the bank because lack of coordination and the simple aspects like a KYC, right? In the case of a joint account, if the property is jointly held, then both needs to have an NRO account or joint NRO account. And sometimes lawyers are refusing to transfer the funds to the singly held NRO account. It's essential to have joint account. Also, NRO account is a mandatory, whether we like it or not. And NRIs are not allowed to have a savings account, which will attract penalties under Foreign Exchange Management Act. And last thing you want is your funds stuck in the Indian bank account. This slide shows the range of services which we offer, which includes a 15 minutes discussions with me, absolutely free of cost. We will send you all a link to the calendar for 15 minutes free discussion. Please feel free to book a call with us. We prepare return tax advice, which is a tax strategies for Australian permanent residents and citizens, which will highlight 4 different options for you to pick and choose from, and ranging from the tax savings mechanism to improving your cash flows. And we also lodge your Indian tax return, Australian tax returns with a dual tax exemptions, which will take a lot of your pain away. And we also assist in selling properties in India, connecting with the lawyers, real estate agents, property valuers in India, assistance in connecting with the real estate agents, lawyers, financial planners, and mortgage brokers in Australia. Indian CAs don't understand Australian compliances because this property sale attracts a tax compliances in Australia, and Aussie accountants don't understand Indian CGT rules. Since we have expertise in both India and Australian tax planning, we are the best place to assist you in minimizing your global tax liabilities. And we have a network within our client base, who are looking to buy Indian properties. And if you are looking for a buyer for your Indian property, we can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you with the sales and repatriation process. All our partners have a good understanding of the requirements of Australian permanent residents and citizens selling properties in India, and you will be in safe hands. Our vision is to offer one-stop solution to sell your Indian properties, bring funds here, and build your real estate investment portfolio in Australia. We offer peace of mind with a lot of handholding from our Indian team and value for service. Our fees, which is tax deductible in Australia, is a small fraction of tax savings we bring. And this will reduce uncertainties in this process, and you can be confidently selling your properties and bringing that funds to Australia. Your funds are definitely going to come to your Australian bank account. Thank you for attending this webinar and really appreciate your time. And thank you once again. Bye.